Hello, hi, it's Adil speaking, bringing you a review of the S&P 500 from an intermarket analysis perspective, bringing you a review of the S&P 500, the Dow, and the Nasdaq. Comprehensive review of where I think the markets are going and why the markets reacted the way they did, and what's going to happen next. Okay, so bringing you a review, a weekend analysis from an intermarket analysis perspective for Monday, commencing the 14th of October 2014. Okay. So basically, the summation so far from a fundamental perspective, we had NFP data, obviously that came in strong. Then there were concerns about tapering and interest rate hikes, given the fact that the jobs data was so strong. Then there was alleviation of those concerns via the FOMC minutes that caused a major rally because everybody was relieved because the Fed maintained dovishness by focusing on wage price inflation. Okay, and obviously were concerned about the higher dollar and the impact of the higher dollar. So obviously the whole emphasis was on the dollar, because the dollar rally itself was tapering and higher interest rates in and of itself. So given the fact that they talked the dollar down, and they still remain talking the dollar down even over the weekend now, we've had a Fed member talking down the dollar. Okay, so there certainly is a currency war going on with regards to the euro versus the dollar, because if you think of it from the Europeans' perspective, they won't do QE, and if they're not doing QE, the only way that they're going to prosper is by talking down the euro, okay, via the ABS, etc., etc. Whether they want to manipulate the euro, etc., is still debatable, okay, but the only way they can do that is by talking down the euro, which they have been doing, because even though they do stress the fact that there's no deflation in the eurozone again over the weekend, or even on Friday, we had several European policymakers stating that there was no deflation, and obviously weaker economic data. The fact that you're not actually doing QE in Europe in the face of exceptionally weak German data, okay, in and of itself is QE, because okay, yes, QE will weaken the currency and obviously lift asset prices, etc., etc. But if you have weak economic data, that in itself feeds through to expectations of QE down the road, of QE inevitability, and that in and of itself causes the euro to fall, because obviously fundamentals are no longer there for a stronger euro, and given the fact that you've got stronger US data, therefore stronger US data versus weaker European data, that in and of itself causes the euro to fall and the dollar to rise. Okay, so that creates tapering for America, okay, and causes concerns about if for the fact that if they're not even increasing interest rates and the dollar remains strong, then when they do increase interest rates, what will happen to the US dollar? That will even be even more stronger, which again hurts US exports basically increases European exports at the expense of hurting US exports. Hence the reason why we've seen the rhetoric this week. Hence the reason why the Fed remains dovish, and you've got comments about the dollar being too strong and hurting growth, and etc., etc. But then the problem is that if Europeans are not growing, then who will the US export to? Okay, you've got sanctions in Russia, so the markets have already been hit to a certain extent. You have China slowing down to a certain degree, so again, and obviously we know the situation in Japan. So this is the conundrum that we have. So we have currency wars, and that's what's creating the volatility, etc., given the uncertainty and so on and so forth. Okay, so that's basically the situation that we see ourselves in. So we've had a weaker German growth. Obviously that itself is obviously hurting markets globally. Okay, and this week obviously we had a dovish Fed, which technically should create a Goldilocks scenario for the US markets, because you've got stronger economic data coming in, which is obviously healthy fundamentally, and then you've got a Fed that remains dovish, okay, and even now talk over the weekend as I'm doing this video of a Fed member stating that they can certainly pause the tapering even, or even increase QE, okay. So Fed may slow tightening if foreign growth disappoints. So what's he trying to say there? He's trying to explain to you that tapering will certainly be postponed, okay, and it could be extended. QE could be extended, because if you postpone tapering, that's extension of QE, and what they're trying to do there is talk the dollar down, and obviously be supportive of equity prices globally. So this is the situation that they find themselves in. So a dovish Fed, as we all know, is good for equity markets. So that's the concern that that's one of the positives for the market. Now, with regards to negatives this week, as we all know, the Ebola concerns. Okay, obviously, leisure tourism, etc., gets hit, and there's an individual who passed away this week. May he rest in peace. With regards to the Ebola concerns, okay, that's number one. Weakening growth abroad, as we all know, obviously weakening growth in Europe especially, and that's been the engine for the sell-off. Okay, and that's basically the situation that we find ourselves in. Okay, yes, we do have the concerns with regards to ISIS and their certain push forward, and that obviously has created a lot of uncertainty as well. Commodities selling off quite substantially globally due to weakening growth, especially led by the report by the IMF this week, which in reality confirmed what everybody already knew. Okay, they already confirmed what everybody knew. So that's basically what we're looking at from that perspective. So they're the concerns, they're the headwinds. Okay, with regards to the market. Now the positives obviously were Alcoa. Alcoa earnings smashed expectations by almost 50%. So that was quite bullish. Fed dovish. That's quite bullish. And economic data overall was pretty strong with regards to the US. So, and adding the fact that you got Fed dovish, that obviously helps and supports the US equity prices. So obviously Hong Kong concerns with regards to the rally and the protest, that subsided as well. So and Russia-Ukraine, the peace remains there, and that certainly seems to be quieter than normal. So geopolitics, there isn't much of a concern other than ISIS. So overall, the US market should certainly be moving higher. Okay, especially with a dovish Fed. So that's basically the situation from a fundamental perspective. Now let's have a look at the markets from a technical perspective. Okay, so let's have a look. Okay, so let's start with the S&P 500. Okay, so we can start off with a weekly chart, and let's work our way through there. So yeah, weekly chart, everybody's talking about this potential break of the bullish channel. That's fine, I understand. We are into previous resistance equals support and horizontal support. So this is a key level that we're at, or key long juncture that we're at the moment, 1905. Obviously, if 1905 breaks on the weekly chart, then the next level is the 50 MA, which is 1985. Okay, that's going to be the next important level. Let's go to a daily chart. Daily chart, we are slap bang into the 200 MA. So I certainly expect to bounce at this 200 MA because we are in this bearish channel. We did actually break out initially, so with the bullish engulfing candle, and that's why I was expecting a potential reversal from that perspective. Okay, so and that didn't transpire. So all we can do is use the lower support trend line, and that's exactly where I expect the markets to bounce. Obviously, this key trend line has broken, which again we need to focus on. Now, if the market does move higher, then the 1925, where previous support equals resistance, will be the key level. So expect to bounce at 1925 just based on the daily chart, and we do look to be making a potential pivot top with a H&S formation. So there's your left shoulder, head obviously has gone in. We're looking to bounce and make a right shoulder before the market rolls over. So we'll keep an eye out and focus on that with regards to that. Okay, so daily chart certainly into support. 60-minute chart, we are into double bottom support, or you can say. So we're at the 1905, 1907, a key support there. So watch out for that support zone. Inverted head and shoulders pattern obviously failed. That's the reason why I kept maintaining my bullishness. Obviously, once we had the double bottom in place, given the Fed dovish stance, etc., everybody was looking for the right shoulder here. That obviously didn't transpire. Failed inverted head and shoulders pattern, as we all know, a failed pattern creates an emotive move in the opposite direction, and that's exactly what transpired. Okay, so that's basically what we find, where we find ourselves. Okay, so given the fact that we're going into next week, what levels are we watching for the S&P 500? Previous support equals resistance, so watch out for the level of resistance at 1925. That's basically what I'll be watching out for. If you take out 1925 next week, then you're going back up to 1970 and up to 200 MA, so watch out for that. Okay, 10-minute chart, again, just breaking lower, lower lows, lower highs, basically, that's all you're looking at. Just from a technical perspective, all you need to do is join these two pivot lows together, and you do have your pivot low here, potentially. Okay, and that's basically what we're going to be looking at coming into the week, or next week, shall we say. So, I was expecting this pattern to play out. This is one of the reasons why I was quite bullish, to be honest with you. inverted head and shoulders pattern that obviously failed to transpire, given the fact that Shanghai didn't sell off as substantially. But it was all about the yen, and the yen obviously folded. Yen pair, should we say, USD JPY, Euro JPY, and obviously the concerns with regards to the US. I mean, the economic data wasn't too bad on Friday actually. So overall, from the US, export prices, import prices, not exactly. There's no inflation concerns there. So obviously the Fed remains dovish. There's nothing else that I could argue overall. So it was a bit of a conundrum with regards to why the markets were falling. Yes, obviously Shanghai, the Nikkei was down quite substantially. I agree with regards from that perspective, and one could argue that was the main catalyst for the market sell-off, given the fact that there's an inverse relationship with the yen pairs. That's USD JPY, Euro JPY, and obviously the Japanese market. Okay, so I expect to bounce up to 1925, hit this upper level. So watch out for that to move next week. And that's obviously supported with the DAX and the UK and European markets being into support as well. Hence the reason why I'm expecting a bounce. Now, let's confirm and verify this. One of the obviously critical supports, weekly and daily chart, especially a daily chart being into slamming into the 200 MA. Certainly expect a bounce there at that first move, because it's a potent support level. Okay, so let's confirm, let's cross-reference that now with the Russell. Okay, Russell 2000, Russell 3000. So Russell 2000 first of all. Okay, Russell 2000 itself problematic. Okay, problematic. Why problematic? Because we have gap fill resist or gap fill support. That's the only next support zone there. So I would like that support zone closed before I say, okay, yes, I want to go into a bullish camp. From that perspective, obviously we've got this in H&S formation, the target being 73. So certainly some way to go. Certainly some way to go with regards to that. Okay, so given the fact that this critical support has gone as well, then the next support really is for 78. So you're about 1 point away with regards to that, and obviously gap fill support bouncing. Okay, so before I go bullish on that, I'd like that to be hit. 60-minute chart, as you can see, this keeps going lower lows, lower highs. There's nothing really there that I can argue. 10-minute chart again remains bearish. There's nothing that I can argue from that perspective either. So okay, so that's basically the situation that we find ourselves in. Okay, so Russell 2000, I can't argue with it being in support. I would like to see that lower down. Let's have a look at the Russell 3000. That generally gives me a better understanding. I was very surprised given the fact that the 200 MA went and the previous resistance equals support went. Very surprised, very surprised. Whether that's a fake out or a breakout, we'll soon find out. I would like to caution the side of a fake out, but again, I'll let the market decide. Okay, so previous support, well, previous resistance equals support there. So obviously if Russell 2000 does fall, then 86 level is the one that I'd like to see. You do have previous resistance equals support here in this region, so we are into a potential support zone there. So that's something that I would keep an eye out for. Weekly chart, obviously we've hit the 50 MA, so the 50 MA generally tends to be quite a crucial or critical support zone. So again, that's something that I'd focus on. Previous resistance equals support as well. So with the 50 MA being hit and tagged, then you do expect a potential bounce with regards to that. So that's something that I'll keep an eye out for. Okay, so the Russell still remains weak, especially given the fact that the Russell 2000 broke the 200 MA. So I would be concerned. But again, looking at the S&P 500, certainly looking for a bounce there. Okay, now let me just have a look at the Wilshire index as well, because that tends to be relatively potent. So let's just have a look at that as well, and cross-reference the US market support. Okay, so here comes a Wilshire 5000. Okay, so the daily chart certainly remains weak. Why? Because we've broken the 200 MA, so that certainly doesn't bode well. Okay, with regards to the markets there, that's something that I'm going to be keeping an eye out for. The only support level that I can see now and focus on is going to be lower down. So again, that's problematic. Certainly is problematic from that perspective. So that's something that I'll keep an eye out for. And we certainly seem to be descending into chaos to a large extent, with the markets making new lows. So again, watch out for this level here, 19,200. But again, very problematic. Okay, so previous resistance equals support. So there is a lot of support in this zone here. So watching out for that. Whether this is a fake out or a breakout, again, open to debate. Okay, so let's just keep an eye out for that and see exactly what happens with regards to that. Okay, so that's basically what we'll be focusing on. Okay, so looking at the weekly chart, 50 MA. Okay, so again, looking at the 50 MA, similar with the other indices that I've mentioned, and 50 MA generally tends to be a support level initially, and that's something that I'll be focusing on. But it certainly has broken a key technical resistance level, so certainly looks circumspect for now. I will go with fundamentals, given the fact that the sell-off in the US has not been the cause due to tapering, because the Fed was dovish. Ebola concerns certainly overblown to a large extent. ISIS concerns certainly overblown, because ISIS doesn't really actually pose a threat at all, okay, from my perspective, because it's just a bunch of idiots and imbeciles, amateur clowns that can be eradicated very quickly, so it won't be a concern. Okay, so Alcoa earnings have come in pretty well and pretty strong, so I can't see any real reason for US weakness at present. Okay, so from my perspective, certainly looking for a bounce just based on a fundamental play, because China itself was relatively strong last week, given especially in the face of a sell-off as well. So that's something that we'll focus on. But yes, Europe certainly is a concern. Now, is the US market so heavily dependent upon a weaker European economy? I think not. Okay, so certainly would look to see the market have a potential bounce going into next week. Okay, so that's the S&P 500 Russell concluded. Now let's have a look at the Dow. Okay, so looking at the Dow Jones Industrial Index, we've pierced the key 200 MA. We were into previous resistance equals support, so I expect a bounce from this at this juncture. We have broken the key trend line, so again that's a concern. And obviously we've broken below the previous resistance equals support, given the next support level of being at 16,300. So if we can get a stronger Asian market, so if China and Shanghai, well, Nikkei and Shanghai bounce, then I'll be back in the bull camp looking for a move higher. And obviously if not, then we move in the opposite direction. Okay, that's basically what we're looking at from that perspective. So let's have a look at the weekly chart for the actual Dow Jones. Okay, so let me just do some TA work here. Okay, so we are into previous resistance equals support. Okay, so this is a key zone, so this is one of the reasons why I'm not very bullish, especially bearish on the US markets as such. Certainly an argument there for a HNS formation to be brewing eventually, but not now. Let's just see if we can connect our dots together, and that's basically where we find ourselves. Okay, so if I connect this, and that's basically where we are. Okay, so there's nothing really else. Obviously this is the only key trend line that we've had below. Okay, all I've done is connect these two dots together, and obviously we are getting this potential move here. So previous resistance equals support, this key level around the 16,500, 16,400, solid support for the Dow Jones. Okay, so expecting a thrust higher here. Let's have a look at the Dow Transportation Index. Now, number one, the Dow Transport will bounce regardless. Why? Because of the oil price. The oil price obviously being so low, that should in essence be helping the Dow Transports. Now, Dow Transport's daily chart has tagged the 200 MA, so therefore expect a bounce immediately, because the 200 MA generally is quite a potent level where you will get a bounce and will get a tag. So I expect a bounce in the Dow, and obviously a bounce in the Dow Jones as well. Okay, so looking at your weekly chart. Yeah, quite a substantial sell-off there, folks. I mean, that's one hell of a bearish engulfing candle. So one can argue, okay, just looking at this chart from this perspective. Okay, one can argue that we certainly have got a argument here for a obviously we are into support for now, but certainly a strong argument for HNS formation. So this is your left shoulder. Okay, we've put in the head, obviously given the fact that the head is followed by the obviously bearish engulfing candle. Then you're looking at making a potential right shoulder, and obviously the market looking to move down south quite substantially. Okay, so watch out for that. Okay, that's something that we are going to be looking at, but for now, definitely expecting a short covering rally come Monday, given the fact that we are into the 200 MA on the Dow Transportation Index. Okay, so again, that argues for a bounce, given the fact that the S&P 500 and the Dow we've concluded and is certainly coming into a bounce. Now, the final cog, technology. Okay, so let's have a look at the Nasdaq to start off with. Okay, so Nasdaq. Okay, so Nasdaq is has closed a gap. So we can see here you've got a falling, expanding wedge pattern here. Okay, so let's just get rid of this. Obviously that bottoming tail failed to hold. That gap fill level certainly failed to hold. The next level we're looking at the moment, I mean, you had a gap here, that's obviously failed. You had a gap here, that's closed now. And the only support level that you can see on the Nasdaq is the 3845 level, and obviously this level as well. So that's your low there. So that's the only two levels that you can possibly see for support on a daily chart. And that's basically what we're looking at here. There's no real HNS formation, nothing, no other pattern that I can see. Definitely looking at the 3870 at the moment. Ideally your 3845 will probably be your low, so watch out for 3840 with regards to that. The weekly chart certainly, like I said, certainly looks bearish. One can argue bearish straight away, but again there certainly seems to be an argument here for a HNS formation, given the fact that's a bearish engulfing candle, some consolidation, and obviously move down. So daily chart itself certainly doesn't look very strong until we get to the 3840 level. Watch out for that level, and then obviously you are looking for a potential bounce. Okay, given with regards to the market, I mean, you did have a bounce here on the 17th of July. So again, we are back into that level or in that zone. So watch out for a potential bounce there. Okay, other than that, certainly remains weak, and watch out below. Let's have a look at the leaders now, leaders and laggards. So let's have a look at the Nasdaq Biotech. Okay, Nasdaq Biotech very weak. Okay, very weak from my perspective. Previous resistance equals support failed to hold. Okay, so you had a level, I mean, you've got previous resistance equals support here. So we are into potential support now. Previous resistance equals support. So watch out for that level. That certainly is a potential support level. And other than that, I can't see any support zones for now. Okay, that's the biotechs. Let's have a look at the semiconductors. The semicons, okay, semicons certainly remain weak. Okay, so daily chart, certainly one hell of a flush. HNS target obviously has been met from that perspective. Let's just get rid of this for now. One hell of a sell-off on the Nasdaq and the semicons. Okay, so you're looking at potential. So we are into horizontal support on the daily chart, so that certainly concludes that. Weekly chart, you are into support as well. Very extensive sell-off there. So certainly argument here for a bounce. Whether this bounce lasts long is certainly debatable. Okay, and obviously that depends on the Fed. But first of all, my fundamental analysis states that yes, the Fed remains dovish. We've had more rhetoric over the weekend with regards to it being dovish. They're starting to talk down the dollar. Whether that has an impact on Europe is different. Again, look for clues on Asia. But overall, certainly is into a decent sweet spot, and certainly a spot where one would cover their shorts, especially with regards to Fed rhetoric remaining dovish, and the post NFP data and the economic data that's coming stronger out of America. So certainly it's in a Goldilocks situation. Okay, stronger data plus a Fed that's dovish and focusing on higher wage price inflation and fighting deflation. So from a fundamental perspective, it's buy the dip. But from a technical perspective now, certainly arguments there on multiple indices for short covering to ensue, and that's basically the name of the game. And that's followed by support on the FTSE and the DAX and European stocks as well. Okay, folks, so conclusion, look for a short squeeze. Risk on, risk off, wax on, wax off. Goodbye now.